Hello and welcome to Gorilla's Forex community. This is going to be a breakdown of the pound versus the yen for the private group. At the blue arrows, what you can see is that clearly at this level, 136,300, GJ is at a very significant level of support previously on a weekly time frame, and that resistance, support, support, support. So this area is really strong. Usually when price comes to this area on a weekly time frame, it pushes off either direction. So what can we expect again? We can expect something similar, right? So what I'm going to do is I'm going to take these arrows off now, so you guys can see what I'm about to start doing with regards to drawing my zones. Okay, so first of all, on the weekly time frame, that's literally the only level that I'm interested in on the weekly time frame. So now what we do is we go to the daily, and you can see that price has pushed off this zone on a daily. The next area that I'm interested in for GJ to potentially tap into is 136,600. That's based on this area here, right? And then we need to be wary of this area, which is the gap. But what I keep telling people to be wary of is this consolidation area. So when GJ pulls inside this box, you can expect the moves to not be very clean at all. And that's just looking back in history. You can see that's generally the theme in this area. You can see through looking at the price action here, you can see that it's not very clean at all, is it? It's very choppy. Okay, so let's go back now, continue our breakdown. So you can see that inside the blue box, it's not very clean price action. So let's pull into the 4-hour time frame, have a look, see where price could potentially go tomorrow. You have some areas over here. Can move this out of the way. This area at 136,900 is based on this support and this resistance. Very nice tight ranges. Going to draw another few zones inside this box. So we have some intraday scalps that we could potentially play with Thursday. Right there. Now, these are the zones that I see for the 4-hour time frame, and as you can see, it's like a head and shoulders pattern. You can see the head, and then this shoulder, and now this shoulder, right? We're making lower highs and lower lows. So we could potentially come up to 136,600 again, maybe even as far as 136,900 before coming down again. If we start to form support here, I'd be very careful about taking sells, because this whole kind of range is not clean at all. Let's go back and look at what happens when price comes into this zone. Look at some liquidity areas here. 135,500. Go back again, look left again. We need to understand what's likely to occur when we want to take our trades. 135.75. Okay, that seems about right. So as we pull into the 30-minute time frame, what you're looking at is you're looking to try and take some scalps in between these zones. So the daily candle's already been formed, and it looks like it's rejecting, but you wouldn't want to take trades yet. You'd want it to push up to 136,600, 136,900 before taking sells. You want to try and catch that top wick. We are in strong bearish momentum, down, down, down. So the likelihood that this daily candle is going to go bullish is it's not a high probability. The fundamentals that I want to kind of bring into play the fundamentals I want to bring into play is this. So if on one hand the Bank of England is coming out and saying it doesn't know how much economic scarring there'll be, how can he say that there's elements that a faster than usual economic recovery is going to take place? It doesn't really make sense, does it? Then, on the other hand, he's saying that the financial sector is more resilient than before the global financial crisis. Not really, because for the first time during this Conservative government, it's the first time that we're running a triple deficit at the UK, in terms of the housing markets. Homeowners are borrowing more money than they make. The government is borrowing more money than they make, and businesses are borrowing more money than they make. And that was before the coronavirus lockdown. During the coronavirus lockdown and emerging from the coronavirus lockdown, there is going to be some serious blowback. So the fact he's saying there is an issue about leverage in corporate sector which comes to bite when you have a big shock. Well, the corporate sector like businesses, is based on the financial sector. So how can he say the financial sector is more resilient if he's talking about the corporate sector coming back to bite? So he's just talking shit, basically. And the traders that have seen this guy come out and talk about this news, they understand that, and that's why, pertaining to the pound versus the yen, they're going to be very, very risk off for the rest of this week. They're going to want to. The pound's going to get a lot weaker, and people are going to be moving their money from the pound into the Japanese yen. So you could potentially see 135.5 get tapped in the next few hours for London. But just wait for the 4-hour candles to show you confirmations. You can see clearly right now that it's starting to reject this kind of area. So that's your resistance. But you'd want to see it. You would want to see the 4-hour flip bearish before you take sales. You don't want to get caught in buys, caught in early sales when you could wait and take real nice entries. So that's the breakdown, guys. Thank you.